a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about investing like Warren Buffett. So, Buffett is one of the greatest, if not the greatest, and most respected investors of all time. And his company, Berkshire Hathaway, reported excellent earnings recently, which sent its Class A shares to an all time high. And according to Barron's, the stock is up more than 25,000 times since 1965 when Buffett took control of the company. Now, if you look at the returns, recent returns, the company has actually produced returns which are more or less like the S&P 500 because they have become too big. Most of their earlier success came because when they were smaller and much more nimble, and they were able to buy good companies at trading at good companies at reasonable valuations. And Buffett had said many times that Charlie and I are not stock pickers, we are business pickers. And they invested in railroads, insurance, candies, and all sorts of companies which were responsible for their earlier success. Now they have their equity portfolio has been growing a lot, and because they have become quite big, and Apple currently accounts for about 50% of their equity portfolio. So it is not easy to invest like Warren Buffett but we can certainly learn some lessons from his investing success and try to invest like him. So one way to invest like him is just to invest in the Berkshire stock. But as I mentioned, it is not going to produce the kind of success that it had earlier. So one ETF that I like is and find Buffett like is this Rennick Vectors Morningstar Wide Mode ETF. The ticker symbol is MOAT, MOAT. So Buffett likes companies with economic moat. So these are sustainable competitive advantages that help a company outperform its peers over the longer term. So the ETF has 10.4 billion in assets and charges an expense ratio of 46 basis points. If you want to learn more about this ETF, we can go to the quote page on Zacks.com. You can read our research report articles for this ETF, and using the link, you can go to Rennick Vector's webpage for this particular ETF. So it invests in attractively priced companies with sustainable competitive advantages. So let's see what it holds currently. So it has Domino's Pizza, Comcast, TransUnion, Alphabet too. These companies which are attractively priced companies with sustainable economic moats. Then uh, earlier in his career, Buffett used to like cheap companies, undervalued companies with great potential, which he called cigar butts. But later, his strategy evolved to that it is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So we can take a look at ETFs that invest in high quality companies that are trading at reasonable, fair valuations. And there are many ETFs that look at quality companies trading at good valuations. The one which I like is the Spider MSCI USA Strategic Factors ETF, and I own it in the ETF investor portfolio. The ticker symbol is QUS. This has about 1 billion in assets and has an expense ratio of 15 basis points. Again, we can go to the quote page on Zacks.com to learn more about this ETF and let's see what it does. So It tracks a smart beta index that blends low volatility, quality, and value in a single exposure. So basically, you get a low volatility strategy with on companies with high quality and attractively uh, valued currently. So let's see what it holds currently. So Apple, Microsoft, Nvidia, Li, Lilly, Meta Platforms, these are the top holdings in this ETF currently. Then Buffett is a fan of low cost index funds. So, in fact, he has long recommended that most investors should just stick with low cost index funds in their core portfolios. And there was this famous bet, 10-year bet, that he had, I think in 2006, that the S&P 500 index will outperform five hedge funds, a combination of five hedge funds over the period of 10 years. And it did. So you can take a look at some of the S&P 500 ETFs, which are a must own in anyone's core portfolios. So there's some very good ultra cheap S&P 500 ETFs. The one which is cheapest now is by State Street, because State Street reduced the expense ratio to just 2 basis points recently, which is just $2 for $10,000 invested. Ultra cheap. The ticker symbol is SPLG. This has 90.5 billion in assets now. But there are other ETFs. The one by Vanguard is VOO, and the one by iShares is IVV, that charge 3 basis points each. So those are also excellent ETFs. 1 basis point doesn't really make a difference over the long term. So all three ETFs are excellent ETFs for any core portfolio for long-term investors. Now, again, we know what the S&P 500 index holds, but we can take a look. So again, let's go to the quote page on Zacks.com. This is the SPDR State Street web page for the CDFs. As you would expect, Apple, Microsoft, Amazon, Nvidia, Alphabet, and Berkshire Hathaway are the top holdings in this particular ETF. On the last slide, I have the comparative performance. So, in fact, over the past 1 year, the Berkshire Hathaway stock has done quite well, and that is thanks mainly to Apple being about half of its equity portfolio. So that is why Berkshire stock is up about 17% over the past year. And the second best performer is the Mode ETF, which is up about 7%. The other ETF, QUS, had a performance which was almost similar to the S&P 500 index. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.